Equity Market Update, June 2023. In June 2023, Indian equities ended the month with strong gains and Nifty 50 and S&P BSE Sensex closing near all-time highs. Nifty 50 and S&P BSE Sensex ended the month approximately 3.5% higher.
The rally was primarily driven by continued buying by FPIs, upbeat US economic data, resilient domestic economic activity, receding inflationary pressures and subdued crude oil prices.
Key events during the month include US Fed and RBI keeping the policy rate unchanged, government announcing the MSP for Kharif crops, decent progress in the monsoon, etc. Mid-caps and small caps outperformed large caps during the month. Most major sector returns were in positive territory with capital goods, healthcare, auto, metals and power being the key outperformers. Performance of major global equity indices was also buoyant with US equities outperforming on the back of rally in large technology stocks. Most other major markets also ended the month with positive returns. FPIs bought equities worth $6.7 billion in June 2023 and have cumulatively bought equities worth $13.6 billion in Q1 financial year 24. On the other hand, domestic institutional investors bought equity worth $0.54 billion in June 2023 and have cumulatively bought approximately $0.4 billion in first quarter of financial year 2024. Flows to mutual funds moderated in May 2023 to approximately INR 2,500 crores vis-a-vis INR 5,400 crore in the month before. Outlook. As on June 30th, 2023, Nifty 50 was trading at approximately 18 times FY25E price to earnings multiple. The valuation multiples have moderated from their recent peak but is at elevated levels vis-a-vis historical average. India's market cap to GDP, which stood at approximately 90%, is within the historical range of the past decade approximately. The gap between 10-year G-Sec yield and 1-year forward Nifty 50 earnings yield has narrowed too from its peak. Thus, while market valuations are still above historical average, they have corrected from their peak.
Further, one should view these valuations in the context of structurally attractive nominal GDP growth, a robust economic recovery, a healthy corporate earnings outlook and strong delevered corporate and banking balance sheets.
The valuations for major sectors are close to or higher than long-term averages. Notably, while small caps have significantly outperformed over the past 3 years, partly due to favorable base, it has significantly underperformed large caps and mid caps in past 5 years. We remain positive on equities over the medium to long term considering the resilient domestic growth outlook, robust corporate profitability, and growth supportive policies. Further, post the corrections in small caps over the past year, valuations have moderated significantly from the peak. Hence, one may consider increasing equity allocation towards small cap funds in line with individual risk appetite and with a medium to long-term time. Accelerated monetary policy tightening, a sharp slowdown in global growth, persistent inflation, a slowdown in earnings growth, and a delay in recovery in the rural sector are key near-term risks. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.